Hey, good morning, everyone, and welcome to the PivotBoss Pre-Market Report for December 20th, 2016. Here's a look at the daily time frame of the ES. What you're seeing right here is a nice little range that we've developed over the last week of trading. We saw prices coil day over day here, inside day after inside day. We're now pushing just beyond the little edge here of the last couple of days, but the true edges of the range, 2270 to 73. Down here at the bottom, it's around 40 to 42, and that's basically the boundaries. We're still in an uptrending market, but right now, as we head into the holiday weekend here in the US, we could see further trading range behavior. So the edges of the previous range are going to be very important. As we get out to the edge, it could be a short-term fade back down. Down here at this edge would be a short-term fade back up with the potential to see new highs, as this is an uptrending market. So it's safer to buy pullbacks right now than fade new highs. And overall, with the volume dropping, volatility dropping, that would imply that we would likely see the price range basically tighten as we head into the rest of the week. But there could be spurts of movement, so keep in mind that some intraday moves could still be seen. So looking at the intraday time frame here, you'll see what we were looking for yesterday was trading range behavior. For the most part, when price got out here to about 62s, we were looking for a fade back to value with the potential to see at least a move to 53s, and it got cut short a little bit here, eventually almost made it. But from here, you've seen price push higher into 68s, extending the range. The overall uptrend remains intact. We could see after the open a little bit of a pullback, and that could be bought for another round of strength into the close. But for the most part, if price gets too far outside of range up here into 73s, that could be an opportunity to watch for some sort of fade opportunity back toward value. Right now, 5-day VPOC is in the 58s. All right, let's take a look at crude oil. Here's crude oil, the higher time frame with the weekly PivotBoss pivots. Here it is. For the most part, crude oil still is holding at these highs, and it took quite a rejection up here, but once that rejection occurred, we've seen price come right back to the point where price was offered, which was 53.40. That was the level the day we gapped up, and then we ran. We were holding above the 53.40s. Price was up here. It was chopping above 54s. So this was a big green bar that morning. But what I mentioned was if price can't hold the 53.40s, that's when we might get back toward 52, fill the gap, and go back toward the previous week's low. So it was 53.40, which was the key to that entire morning. And you can see the next day it was defended, and you saw the continuation. That was our expectation near the midpoint. And once we found lows here, the expectation was we would likely rally back toward that level, which we have. So now we're at the level and we're holding. The fact that we rallied all the way back here and are holding at this level, it opens the door to even more strength, perhaps beyond this high, and then perhaps a fade back down. Right now, what you're seeing is basically acceptance or an attempt to establish acceptance above 52s. 52 has seen nothing but rejections time and time again, and this has seen trading back and forth above 52s. That's very important because, as I mentioned before, if crude oil can establish acceptance above 52s, that would pave a longer-term move into 62s, and that would then become the trading range that we'll likely see over the first part of the next year, 52 to 62. So this is very important up here. Now again, we have to continue to watch for bulls to come in at or below 52s for a shot higher. But basically, that's what's happening now. It's just hard to see anything happening at this moment unless we get beyond 53.40, because above 53.40 would be a quick squeeze to retest prices above this high. Failure to get above that zone just kind of walks this thing back down within the trading range, which is currently 50 to about 54s, right? So that's the trading range at the moment. All pullbacks still to be bought at the moment until proven otherwise. Let's take a look here at the intraday time frame. So here's what I mean. We're seeing kind of a rounded bottom the previous session here. We're seeing this thing kind of work its way up. Right now we have an uptrending market on a short-term basis and overnight trading with pullbacks being bought. So price went bid through VWAP, the first pullback here, defended with double bottoms. The next pullback held in a clean market structure, and so far it's been an uptrending market. Overall, again, 53.40 is the big level. So right now, this is where price is trying to hold above that zone. If there's any failure here, we could see a rotation back down, which again, pullbacks to be bought until proven otherwise for a shot at pushing through 53.40 and into previous highs. Failure to hold 53.40 overall, that's going to be the main pivot to watch. So over under today is going to be 53.40. All right, let's take a look now at gold futures. We talked about before that gold was in its next holding pattern ahead of the next potential flush, and right now it looks like the weak hands are already beginning to give it up. So we saw the last flush come out here. We saw 2 days of holding. I talked about how defending 44s was going to be very important into the pivot range, and the next day after that we could see a rejection or a break that leads to new lows. And right now we haven't quite gotten to new lows, but we've already gotten a 50% stop run day here from the previous session, with a shot to see more downside if price can get below the 1125s. That really opens up the downside here for gold. And as I mentioned before, if we do push lower, the next major downside target based off of the key breakout would be this 250% expansion level right here. And that would be the 1092.70 level. It reached 300% because it's forecasting from the center of the range, but it's 250% expansion from the edge of the range. So right now, again, bulls really need to get it above 1144s, 1146s in order to see a potential squeeze back to 1170. That can still happen, obviously. For example, if prices were rejected down below this low, then we could see a retest back at these highs, and then anything can happen from there. So if you're bullish gold, which right now there's no reason to be bullish gold, if you want to buy for some reason, it would be watching for failed range expansion below the previous week's low for a slight push back toward highs. Okay, let's take a look now at the NQ. Here's the NQ. We've been quite bullish the NQ. I told you the key level to watch would be 49.10s, right? 49.10 and into 4900. And that's a very clean little market right now. So it's fading the edges of this range. So basically fading 4900 to 49.10, and you fade it up to about 49.60. And then you take anything above 49.60 and you try to fade it back down. As I mentioned before, this is an uptrending market, so it's safer to buy pullbacks right now. And if you're looking to be an early bear, then you'd be looking to fade these earliest highs. But you're taking the most risk because that's the point where we could see further strength. Now overall, if there is any failure to see a continuation and you start to see rejection up here, it's almost a surefire bet that it's likely going to test that low and expand that range downward. So I'd be watching for early rejections up here to tip this thing off that we might come back this way. If we do pull back, I would say the first inclination would be for bulls to defend at some point, so you got to be careful. But this is a very clear pivot in the charts, 49.10, and if there's any failure to hold that level, it could be significant implications for a move across the range. On an intraday basis, again, we're still in the trading range, and we may remain in that range at least throughout the week. And again, the trading range here, if you kind of bring this thing out a little bit, has been great. It's been 49.60s to about 49.10 to 4900. So there's a very clear zone up here. So call it 49.70 now. So we're expanding it just a little bit. If we come up into 49.70, it could be an opportunity to bring it to value. If price gets down into 49.10, 4900, it could be an opportunity to bring it back up. This is building energy for an expansion phase. At some point, we will see expansion outside of this range, and it could be rather significant, at least on a 2 to 3 day basis. All right, that's it for now. Let's see how this thing plays out heading into the rest of the session. Good luck and trade well.